Hey everyone, welcome back to Corporate Decoder, the place where we unpack big company secrets and find out if they're actually as solid as they seem. Today we're diving into the Federal Home Loan Bank of Chicago's latest report. It sounds a bit dry, but trust me, there is some important stuff here about how they're raising a ton of money and what it means for the markets. Before we jump in, if you're new here and love getting these corporate insights without the jargon, make sure you hit subscribe. And if you want to join a community that is all about dissecting these filings, our Discord is linked in the description below. So what is the big news from the Federal Home Loan Bank of Chicago, or the bank as they like to call it? Well, they help fund housing and community development by selling debt securities, which are basically like loans they take out from investors. These are called consolidated obligations, and they are the joint and several obligations of all 11 federal home loan banks. Think of it as a big pot of money that all these banks share responsibility for. Now, the bank announced on the 14th of October 2025 that they were issuing some of these consolidated obligations. These aren't just small loans, they are massive amounts of money. They are not guaranteed by the US government, so investors are relying on the financial strength of these 11 banks. This filing is all about detailing those new debt issuances. The bank provides a schedule which essentially lists out the bonds and discount notes they are committed to issuing. This includes any obligations where they've taken over the primary repayment duty from another federal home loan bank. It's important to understand that this schedule excludes certain short-term discount notes issues in the normal course of business. Also, you can't use this schedule to track the total amount of debt outstanding because it doesn't show if the new money replaces old debt. That information is in their regular financial reports. Let's look at the specific deals. We see several issuances on the 14th of October 2025, for instance. There is one with a CUSIP number 3130B85K4 that will be settled on the 21st of October 2025 and matures on the 21st of January 2026. This one is what they call non-callable, meaning the bank can just pay it off early whenever they feel like it. It is a variable single index floater, which means the interest rate will change based on a specific index, but they haven't provided the actual rate percentage for this variable portion. The bank SPAR amount for this particular issuance is a whopping $1 billion. There are two of these totaling $2 billion. Then there is another one on the same trade date, the 14th of October 2025, but with a different CUSIP, 3130B85L2. This one also settles on the 21st of October 2025 and matures later on the 23rd of February 2026. This is also a variable single index floater with no coupon rate disclosed, and the size of this deal is even larger at $2 billion. We also see a deal with CUSIP 3130B86trading with a settlement date of October 15, 2025 and a maturity date of November 6, 2026. This one is different. It has an optional principal redemption feature, which means the bank can choose to pay it back early on certain dates. The style of this redemption is Bermudan, and it is a fixed constant rate type. This means the interest rate is set at a steady percentage for the life of the bond, and it is a pretty good chunk of change, 2 250 airline dollars, with a coupon rate of 10.9%. To break down these terms a bit more, when they say fixed constant rate, it means the interest payments will stay the same throughout the life of the bond. Variable single index floater means the interest rate will fluctuate based on a specific market index, so the payments you receive will go up or down. Non-callable means the issuer, the bank in this case, cannot redeem these bonds before their maturity date. Optional principal redemption means the bank has the option to pay off the debt early, and Bermudan style means they can do it on specific recurring dates. Now, who signed off on this? It was Michael Palumbo, Vice President of the Federal Home Loan Bank of Chicago, on the 16th of October 2025. So what is our take on all this? The Federal Home Loan Bank of Chicago is a massive entity that plays a crucial role in the financial system, especially for housing. The sheer volume of money they are raising, billions of dollars, shows their significant operational scale. Issuing debt is their primary way of getting funds, so these reports are essentially their way of telling us how they are financing themselves. The key thing to watch is the overall health of the Federal Home Loan Bank system. Since these consolidated obligations are the joint and several responsibility of all 11 banks, a problem at one could impact the others. The fact that they are largely funded by these debt issuances means that interest rate environments and investor confidence are critical. When rates go up, the cost of borrowing for the bank increases, which could eventually filter down into mortgage rates or their ability to fund projects. We need to keep an eye on the combined financial strength of all 11 federal home loan banks. If one bank were to struggle significantly, it could create ripples because of that joint and several obligations. However, these institutions are regulated by the Federal Housing Finance Agency, or FHFA, which is meant to ensure their stability. For investors, understanding these issuances is crucial. They are not guaranteed by the US government, so the creditworthiness of the federal home loan banks themselves is the main factor. The details in this report, like the varying call features and rate types, help sophisticated investors understand the risk and potential yield of these specific debt instruments. In conclusion, this report is a procedural filing detailing the bank's ongoing financing activities. It underscores their role as a major issuer of debt to support their mission. The main takeaway is the massive scale of their operations and the importance of investor confidence in the federal home loan bank system. There aren't really any risks in the traditional sense of a specific business problem here, but rather systemic financial market risks that apply to any large debt issuer. Alright, that is our breakdown of the Federal Home Loan Bank of Chicago's latest report. What is your take on these numbers and what they signal for the financing of housing in the US? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.